Good morning everybody, it's Chris from Serene Education with the 4 majors notice update for the 17th of July 2012. Hi guys, I'm going to be dealing with 4 majors starting with the euro against the US dollar. So have a look at the daily chart. Okay, yesterday very indecisive, not a hell of a lot of movement at all, to be honest with you. I'm just going to refresh my screen just to make sure it's a genuine candle, but you can see the open and close very stagnant, not much momentum at all, and we are coming towards a likely bottom. I just want to show you a fib projection, so you can see very much an extended one from October last year through to January of this year, and then subsequently we had a bounce higher towards the 13,300 mark, 3,500 mark, and then since then we've seen price falling lower. Well, this projection point lower is what I'm interested in, because it's now finding support above a last protocol 78.6 fib extension mark. Quite clearly see that price just recently coming into this area at 12,200, and on 2 consecutive days we've seen price now consolidating in this area, and we've seen a bounce, a pause, a consolidation at this level. So CTC long term is still very much negative. In fact, all our moving averages are above price in the direction of the downside trend as stated by the CTC, and including our institution moving average on our daily is very much on the upside. So you can see we are pretty much capped by a negative downtrend. Long-term trend you can see well above us, and if I just make it nice and thick, there we go. But as price is moving lower, you can quite clearly see that the momentum is starting to squeeze between 2 points, okay, these lower swings, and hence the reason why at 78.6 here we've had a likelihood of 2 areas of support, and fair enough, we've had a nice move to the upside. Friday's bullish candle engulfing the prior negative candle at support, and we've seen a pullback. However, the pullback now, it'll be very interesting to see how far this pullback continues to, because you can see the prior support of resistance level over here, for example, at this morning star formation, and you can see previously when we had the break lower, the consolidation and the move to the downside towards the 78.6. Price is now heading into this 12,300 mark, which happens to be a resistance level. Okay, so if price is now to be considered long-term positive, then we need to see this momentum starting to move on these time frames, and ideally we'd like to see a break and close higher than the 12,300. But you can quite clearly see that price support could very well be the new resistance level here in the hot right edge, and if that continues, then the outlook could be that we should be seeing price tackling the 12,200 in the foreseeable future. So this hurdle over here at 1235 is now in play. You can quite clearly see we had a resistance level here and a price support. So price support could be the new resistance as price is broken lower than that, and very much the sentiment overall is still generally negative, because that's being dictated by the CTC histograms on either side. So for all your intraday traders looking for setups, look for potential shorting opportunity in and around this area 12,300, or your passive long-term traders look for the 12,200 to be broken, and if you see a break of that, then we should be targeting those lows we found on our weekly chart. Into sterling, let's have a look. We've had 2 consecutive days of upside movement. Friday's bullish engulfing candle, and then we see Monday moving higher on that news analysis. However, if you look at the overall chart, you can quite clearly see that we've had lower swings, swing low, swing low, swing low, and even though we are seeing upside movement, this area here, this trend line, this intermediate trend line, is or has in the past been a sticking point, and you can quite clearly see the price moving into this area, and then this morning on the Asian session moving higher slightly, but however going into the European Open, you can see that we have the 50 period moving average acting as a clear resistance level, and price hugging the bottom end of this wick. Now in terms of fib retracement areas, let's have a look and see how much the price has retraced since the all-time high in May and the sell-off towards us early, the late or early June. You can see the 23.6 and the 38.2, and you can quite clearly see how this intermediate downtrend over here, for example, plus this price support and resistance level here and the fib extension at 38.2 are in play. Okay, so it's got 2 forms of resistance above us, and the third form of resistance is going to come in potentially news. We have Bank of England's Governor King speaking, and we have the inflation letter for sterling. So those 2 things could pose a bit of a problem for this pair to continue to the upside. So it will be far better for price to actually close higher than this area of resistance here at 38, above 38.2. Get above that, then we should be targeting the 1575, 15800 at the institution moving average above us for all you intraday short-term traders. For the long term, this is still looking negative, as you can see quite clearly. The CTC on the other side is very much red. Yes, we have a blue candle, however there's too much above us in terms of resistance to look for any buying opportunities on this time frame. So if we do get a break and close higher on a daily time frame above the 38.2, then our intraday time frames we should be looking for opportunities to the upside here, roughly around the 1575, 5800 mark. Onto US dollar Swiss franc, this pair hesitating. 3 consecutive days of indecision. Notice candles very similar. Clear resistance at 985. Go look and see why there's a resistance at 985. You're going to see the momentum, price moving higher steadily. If you look at the extension, the fib projection on this particular one, we see a lot of buying sentiment through May, right up to those highs just before or the start of June. Then we had a considerable pullback through June, through mid-June, and then you can see the projections and prices bounced higher. In doing so, breaking above that 9700, which happened to be prior resistance here clearly on our daily, and moving higher towards the 50%, and in doing so trading towards 61.8, but finding a clear resistance of 61.8 and trading in this range of the past couple of days between the 61.8 and the 50%. Yesterday's candle very much giving us a clear negative candle. You can see how clear 3 days of indecision plus yesterday's candle could very well possibly give us that decisive decision. You can see prices trading closed at the underside of the 50% line, which was the 9800, and you can see on the Asian session this morning prices trading at the underside of this level now. So intraday traders, look for price to find resistance now at 9800, and then if that's the case, look for further shorting opportunities intraday to at least the 9700, which happened to be prior resistance in the past here at 9700. So as long as price finds resistance now intraday at 9800, look for potential entries to the downside, even though CTC is telling us it's blue across the board on our daily. These 4 candles over here gives us a lot of negative sentiment at a prior resistance level, and in doing so, yesterday's candle closing below this 50% line could set up for potential further shorting opportunities to the downside. And if that's the case, then we should see price moving towards the 9700 intraday for the foreseeable future. I've just gone into the hourly chart for you guys on this US dollar Swiss franc to see exactly what it is that I'm seeing. I mentioned on the daily 9800 is 61.8, and below us is at 9700. You can see price now trading below that now, that area of prior resistance. Resistance over here clearly, then a breakout, and then a bit of support. But price has moved lower over the past couple of days, and in doing so, it's trading below this major price support and resistance level at 9800. The longer it finds resistance here below this 800 mark, 9800, then ultimately we should be looking for bearish sentiment to reflect on the chart and our template. I'll clearly see we had a red sell arrow followed by the candles going red, and the CTC on the other side on our hourly going red as well, forming lower swings. But you can see quite clearly the institution moving average now on this time frame is in play. A lot of indecision candles in and around this area, and if we get a nice bearish engulfing and it closes lower than the institution moving average, it'll give us a clear indication of some further shorting opportunities to the downside, and we should be targeting our 9700 for the foreseeable, for the remainder of this week, as our first clear target to the downside. Last pair of the day is US dollar Japanese yen. As I mentioned throughout most of my analysis, 80, a price support and resistance level in the past, quite a noticeable one, a very strong one. You can see price moving to the upside recently and tackling some all-time highs since those lows we saw in February, all the way up here to early parts of March. In doing so, we've seen price revert to the downside after failing to break above the 8400 mark, which was a very strong support and resistance level in the past on our monthly charts. And in doing so, prices moved back towards this 80 mark, however not finding support. Okay, with any breakout here that we saw here through Feb, we see the continuation. However, after a major break like that, you expect price to pull back, and it should have pulled back to at least the 50% line, which coincides with this 80 mark price support and resistance level, and then building some sentiment on this prior resistance level, building sentiment here at support at 80, and then rallying higher into the 84 and higher. That failed to materialize, as the sentiment going into the support of here was very indecisive, and then we got our decision candle here in the form of this very bearish engulfing candle at the support and resistance level. Quite clearly see the consolidation range here. That took us lower and then higher to the underside now of price support, and now previous support was above the 80. Now there seems to be more resistance below the 80, and price headed lower towards those fib retracement areas of 61.8 and ultimately 78.6 before we saw price bouncing high and reattempting the 80. So price, as you can quite clearly see, there's less happening above this area here, and there's more happening below it. So it's telling you that sentiment is genuinely negative because price is spending more time below a major support and resistance level than above it. Okay, so it's ultimately that you'd see the CTC on the other side showing that or reflecting that sentiment, which would then be classified as negativity. Okay, and you can quite clearly see that after 2 full weeks of indecision, with small trading ranges at the underside of 80, price has pretty much given up the ghost just recently, and we've seen some shorting to the downside. Yesterday's candle particularly very important because it's taken us below the institution moving average, guys. Okay, and you can see on the Asian session last night or this morning, you can see prices pulled to the underside of that, which is put us to the underside of the 79.10, which happens to be the 61.8 retracement area on this pair. As long as price finds resistance now at the underside of the institution, which coincides with the 61.8, then this area here becomes a major resistance level. Yeah, okay, in this area here, and then we should see further continuations to the downside, and ultimately we should be targeting the 77.7 mark at the 78.6 fib retracement area. Quite clearly see 78.6 on our daily as our next target for the foreseeable future. Get below the 78.6 here at 77.70, then we should be looking at 100% movement way down here to 7600 as our ultimate target long term. So 80 capped resistance level, price is moving away from it. CTCs in our favor, red across the board, and most importantly, we're trading below all the moving average, including the most important one is the institution moving average. Find resistance now. Price cannot rally higher or cannot build momentum and close higher than the 61.8 and the institution moving average. Doing so would cancel out this negativity, and we could see price popping back up towards the 80 mark. It's very important that price maintains this momentum and fails to find support above this area here. So it's got to find resistance. So a clear negative candle here, either one with a long wick with more trading body to the bottom end, would tell you that the exhaustion is clearly in favor of downside movement, and then we should be targeting these areas here at 77.7 as our first target, and our second target way down here at 78.6, the 7600 as our second target on our daily long-term trade. So very important, guys. If you can just hold tight, see what this candle gives us today. If it's a negative one, then we should be looking for entries at the low of the candle, stop above the price swing, which happens to be above the 61.8 here, roughly around the 79.30 mark, and then we should be targeting those areas to the downside. That's it, guys. Hope you have a fantastic trading day. Please look at your news announcements today. There's a hell of a lot of news, especially for sterling. We have Merv King speaking. We have the inflation letter from the British government, Bank of England, sorry. And then this afternoon we have the US data. We have quite a lot of US data. Core CPI results month on month. We have overnight rates. That's the interest rate for Canada. Could be interesting for all you guys trading Loonie. Then we have the US industrial production month-on-month figures. We have Mr. Bernanke testifying later this afternoon at 3 p.m. GMT. So there's a lot of news out this afternoon. So if you're not trading any pairs, rather stand aside. Let's get a clear signal for what happens for the speculative side, and then we'll trade the outcome of it. So have a fantastic trade, and I'll see you first thing tomorrow. Until then, trade serenely.